Welcome back, viewers. In today's video, we are going to discuss a crucial topic that affects the world of mutual funds. I'm Wasim, and you're watching Financial Fusion. Recently, the Securities and Exchange Board of India, SEBI, has introduced some significant changes that could impact your mutual fund investments. So, let's dive right in and understand the SEBI's new rule for mutual funds in 2023. Overview of SEBI's new rule. Now, let's talk about SEBI's new rule for mutual funds. In 2023, SEBI introduced a series of regulations aimed at increasing transparency, protecting investors, and enhancing the overall efficiency of the mutual fund industry. Categorization and rationalization of mutual funds. One of the key aspects of the new rule is the categorization and rationalization of mutual funds. SEBI has streamlined the categories of mutual funds to make it easier for investors to understand their risk profiles and investment objectives. This move intends to bring uniformity and consistency in the mutual fund offerings available in the market. Reduction in expense ratio. Another significant change is the reduction in expense ratio caps. The expense ratio represents the annual cost that investors pay for managing the mutual fund. With the new rule, SEBI aims to ensure that investors enjoy better returns on their investments by lowering the overall cost of investing in mutual funds. New rules for fund managers. The new SEBI rule also brings certain requirements for fund managers to improve accountability and performance. Minimum investment in mutual funds. SEBI now requires fund managers to have a minimum investment in the schemes they manage. This ensures that fund managers have skin in the game and align their interests with those of the investors. Performance-linked pay. Additionally, the new rule introduces performance-linked pay for fund managers, which means their compensation will be directly tied to the performance of the mutual fund schemes they oversee. This measure is designed to incentivize fund managers to strive for better results and protect the interests of the investors. Impact on investors. Now, let's discuss how these new SEBI regulations will impact you as an investor. Clarity in investment choices. The rationalization of mutual fund categories will offer you more clarity in choosing the right fund that aligns with your financial goals and risk tolerance. Potentially higher returns. With a reduction in expense ratio, you may see higher returns on your mutual fund investments over the long term. Increased fund manager accountability. The new rules for fund managers are expected to enhance accountability, leading to better fund management and potentially improved performance. Conclusion. In conclusion, SEBI's new rule for mutual funds in 2023 brings several positive changes that are aimed at safeguarding your investments and making the mutual fund industry more investor-friendly. As an investor, it's essential to stay informed about these regulations and their potential impact on your financial planning. If you found this video helpful, make sure to hit the like button and subscribe to our channel for more insightful content on finance and investing. Also, don't forget to share this video with your friends and family. Thank you for watching, and until next time, happy investing.